Big way to start the week for the S&P 500 as well as semiconductors, but Tesla actually sat flat for most of the trading session, closing at $412. We did at one point hit a high of about $426. And in this video, we're going to go over my predictions for Tesla. We're going to go off of the analysis from last week, talk about Friday's close as well as today's close. We're going to go over semiconductors because we have CES this week. AMD is one of the big holdings we have right now. We're going to cover Nvidia. We're going to also talk about Bitcoin, MSTR, and a couple of other stocks. Let's start first with Tesla, and let's zoom out to the weekly chart. The only indicator that we're really going to be using on this chart is the BX trender, which is the indicator at the bottom of your screen. The current settings are 5, 20, 5, 25, and the only thing that we care about is the histogram. We were using the old 2 SMA iteration, but after further backtesting, we noticed that it was getting us in and out of positions too early. It was actually showing a lot of false signals. For those of you who have not been with us since the middle of the summer, we initially became bullish on Tesla back in May. The reason for this is that we were having bullish accumulation or a flip from red to green on the BX trender. This shows buying pressure entering the market, which is normally going to be an indication that a breakout is going to happen. Prior to the breakout that happened in 2025, you can see that price was continuing to make lower highs each and every single month, as well as higher lows. This is called a symmetrical triangle, and normally this will break out to the upside. If we zoom in further on the weekly chart, you'll notice that during April and May, when we were getting bullish accumulation on this BX, we're also getting very, very tight compression within price action. I teach my students in the academy that there are 3 main ways that the market is going to move. The first is going to be called a compression, and this happens when price is usually trading between a tight range, such as back here in April and June. Every compression will therefore lead to either an expansion, which I have highlighted here. This is when we have higher highs on the BX trender and price is breaking out with a ton of strength behind it. And the third is the opposite of an expansion, and that's called a capitulation. And this is when price is selling off aggressively and the BX trender is either making lower highs or lower lows. In most cases, after price is compressing with bullish momentum increasing on the BX trender, this is an indication that the expansion is normally going to happen and break out to the upside. And that's exactly what happened. Price from low to high ran about 51%, and we held our bullish outlook on this until about July 22nd when price pulled back and the BX made a lower high. This would have given you worst case a 29% return within that breakout. Just because the BX is now making lower highs in this example doesn't mean that we are bearish. It just simply means that money is getting pulled out of this, and we could either 1, close our position entirely, 2, close half of our position and just let this play out, or 3, wait for it to pull back and turn red. In most cases, I like to take half, if not all of my profits off the table at a lower high. This is a trading environment that we want to be a part of. I talk to my students all the time within our Discord community and our live streams, and I say that one of my, quote, superpowers is the fact that I only trade in an ideal market. If you could just remove trading in a bearish crappy market without buying pressure behind it, then you're going to eliminate a lot of losing trades. If we just look at this 2 to 3 month time frame right here, you could have traded any type of style within this environment. You could have done day trading, you could have done 1 hour swing trading, you could have done a 4 hour like whatever it is, when the market, or in this case Tesla, is expanding 60% within a couple of months because we have so much buying happening here, you could trade anything and make money. Now, the most important thing is when we have these types of situations where we're making lower highs and lower lows to just sit out and not trade at all until we see bullish accumulation once again. And of course, this isn't always going to work out to perfection. In this case, we would have had the entry right about here on September 9th. BX continues to make higher highs. We were up 15% at one point, but if we would have waited to make this lower low, which you could see here, we would have actually lost 7%. But here's the deal. You don't have to be right to be rich. all that matters is that when you are winning significantly more than you are losing. So in this first trade here, we would have made worst case 30%, best case 60%. Well, I will take that for sure if it means that when I lose, I'm losing worst case 7%. If we were to go back in on that very next push up, yes, it sucks that we not only didn't get to play this bounce and we actually sold at the worst time, but move on and get over it. Because if we just entered once we got bullish accumulation again, we would have had anywhere between an 80% high to low. But even just closing last week when the BX flipped lower highs is a 51% return. And so what this means for me is that now that the BX is making lower highs, and even on the shorter time frame, such as the 2 SMA, the SMA line was red. This is an indication for me to not become bearish on Tesla, but instead to not be as aggressive in my decision making and in my trades. So essentially all of these breakouts over the past 6 months that we just went over, I was trading directional call options. I was buying calls for 3, 4, 5 months out, sometimes even 1 or 2 years out. And now they're seeing lower highs or a little bit of weakness. All it means is that I'm going to focus at this point on selling cash secured puts. And if I couldn't do that because of the size of my account or my capital, I would simply wait for the BX to once again flip back to making higher highs like it did prior on the weekly chart. Another thing to remember is to zoom all the way out to a monthly chart, which is an even stronger, slower moving chart than the weekly. And if you notice, the BX is making higher lows and higher highs. And so as long as this bigger time frame is showing the direction and the strength that we want, we can basically buy every single one of these dips. In last week's videos, we were covering the recent sell-off that's been happening on the daily chart. We were talking about how price pulled back from most recent high down to this support and then bounced, but unfortunately made a lower high. This is normally an indication that price will sell off again into a lower low. Since we hit this low of 375, the BX has made a higher low and now again a higher low today. Because of the weekly chart showing lower highs and a bit of weakness, I believe the more realistic chance, really probably about 70% chance, that Tesla is going to move its way back up to best case 450 before rejecting potentially one more time to test 350 or 375. Now, there's also a chance that that doesn't happen. And if price can actually push through 450 and take out, very importantly, this previous high, that would trigger the weekly to flip the BX back to bright green or higher highs, which would show the subsequent breakout after that. So for me, I am still bullish on Tesla, but I've just simply removed the aggressiveness within my decision making to my trades. Instead of trading directional call options or even trading shares, my plan is to sell cash secured puts until we prove that buyers are stepping back into the market on the weekly time frame. If the weekly BX can flip back to bright green, then I will no longer look to sell cash secured puts, and instead I will look to trade directional calls once again. S&P 500 is up about 0.5% today, but unfortunately, we are still not in an environment in which I would be aggressively bullish. You guys know, in order for me to be aggressively bullish, price needs to be making higher highs, and we need to have a green BX trender. If you look at the past 4 years, if we exclude this downtrend in 2022, we would not have went long at all here. Remember, because price is making lower lows and lower highs. But once we break structure and actually take out higher highs and make higher lows, then we begin to look for the BX to turn green. Following these rules, we would have had a multi-month breakout from May to June of 14%. From there, when it turned red, we would have sat out from the market entirely, allowing the S&P 500 to pull back about 8% before bouncing. From there, we would have taken a long stance on the market and an aggressive stance on the market around November 13th of 2024, which would have been a 21% multi-month run. Allowing the BX to turn red once again, we get a multi-month consolidation before another 7% run, followed by a 5% pullback. A lot of chop within the market, which we would not have been trading in. We would have definitely taken a small, probably 2% loss on this pullback, followed by a 4.5% run and a 2.5% run. And so that leaves us with where we are right now. The first thing to understand is that the trend overall is still bullish. This means that we do not look to short the market whatsoever. And the answer to that question, really, because a lot of people ask me that, lies in the fact of look at these short opportunities. Every one of these short opportunities, except for maybe this one, were not worth the risk at all. They sold off only to get bought up extremely quickly. If you want short opportunities, then what you need to do is wait for the market to break the uptrend, much like what happened after 2020 and 2021. Once we broke this upward trend and started making lower lows and lower highs, this is where you look to start shorting. And remember, use the opposite idea here. Instead of going long when it turns green, we're actually just going to short when it turns red, and then cover the short when it turns green once again. So in these types of situations, there's a couple of things that we could do. Number one during these times is that if I really like the stock long term, I will focus on selling cash secured puts. This is something that you do need more capital to do. So some of you maybe haven't heard of it or you can't do it. But if you can, this is a great time to do it because we're within an uptrend. We are probably going to bounce and get some strength in the next couple of weeks, but it's still just a little too early for me to become full on aggressive and bullish for the S&P 500. The other thing is that if I didn't have enough capital to do so, then I would just simply sit out of the market and wait until we get this type of setup on the S&P 500. If we zoom in on a daily chart here, you will see that we did bounce off of that neckline and that liquidity level. We are making higher lows and now higher highs on the BX trender, which is a good sign. But I believe that we need to actually take out $600 this week and close above $600. If that happens, it will most likely flip the BX from dark red to light red, and that would give us our entry requirements to become aggressive on the market once again. The same situation is setting up for Nvidia. And I want to cover this because we've been talking about this for a while. And I think that a lot of people were confused as to my approach on Nvidia, or specifically like thinking I have positions on Nvidia or I had positions on Nvidia when that's not the case, right? Like I want to say that maybe they just didn't watch the video because I state that in the videos that if I have a position or not. But a lot of people are like, dude, it didn't go to $120. Like, what the hell? Well, yeah, of course. I mean, when you're looking at something like this, let's actually go to TradingView and let's go back to November and cover the setup that was happening here so that you guys can get an understanding if you weren't able to see all the videos of what I was watching. So you can see, much like the same things that we've been talking about across all of our videos, is that when we are in an uptrend and when we start to get higher lows and then eventually the shift into green on the BX, this means that an expansion is going to happen to the upside. So when we're looking at something like Nvidia and we're seeing lower highs, much like we saw back here, seeing lower highs again, much like we saw back here, and then lower highs again happening at that point. This doesn't mean that I'm looking to short Nvidia. It means that I'm still bullish. The trend is still bullish as well. But that being said, in most cases, price is going to have to pull back into a discounted range before it bounces. This is why, if I'm going to go back to TrendSpider very quickly, this is why we are expecting, worst case, a drop to 120, because we saw the price was pushing up, made a higher high, higher low, but then again came back, made an equal low, a lower high, and in most cases, when this head and shoulders pattern occurs, price will drop down to $120. So let's move back to November here on the weekly chart. The fact that the weekly chart is making lower highs means that we are not going to take any long positions. In order for us to take a long position, we need to go back into one of these where we start making higher lows, so a shift from dark red to light red, or higher highs, which is the shift from dark green to bright green. If we allow this to play out, you can see that we have massive bounces, but none of them actually hold and sustain themselves. So do we get some buying opportunities for Nvidia here? Of course we do. But when we see these types of bounces, we know that this bounce has a very low chance of actually pushing up into a higher high. Why? Because we can look at the weekly chart and see that market participants are not active enough to actually bid the stock higher. And so what's most likely going to happen is it's going to come up and hit equal highs or lower highs and then continue the consolidation. We saw this all within back here. and within here. So we could sit here and just watch the daily forever, and not until the weekly flips are we even going to potentially look at this long. Coming back to December 19th, you can see the Head and Shoulders breaks this neckline, and that's why we are thinking about $120 as a potential low. Now, we wrote out a longer breakdown where I go over 2 potential ideas for bulls back around the 19th. As we were breaking this level, one of the things that I was going to do, which I never got to do, was sell cash secured puts. When we're trading around 130, if I believe the worst case is we're going to drop down to 120, then what I can do is sell a cash secured put to a bear. So the person who is buying my put is bearish, and because I'm selling my put to them, I am bullish on the position. From that point, worst case scenario, if it drops 7%, then I'm forced to buy Nvidia at $120, which is great because I think that's the lowest it would have went anyway. The other option is that if I wanted to only go long, I would have looked to go with 2 entries. One entry could have been here at $130, and the second entry could be down at $120. I feel that a lot of people who are newer to trading think that their entries and exits need to be one specific order, and that is not the case when it comes to actual fund managers. Like, we average in and we average out of positions, and we reduce risk based upon specific things in the market, and so you'll rarely see me just do one full whole entry or exit unless I'm following a trading bot, which is therefore following a bigger time frame, such as a weekly or a monthly. So in this case, we expected Nvidia to sell off down to 120, which never happened. So let's zoom back out to the weekly, and you can see that even though we had that bounce here, price continues to sell off. But then last week on Friday, we got a massive rally, which ended up flipping the BX from dark red to light red. This now means that we are within an environment in which Nvidia is most likely going to continue to expand. We were expecting a high potentially of 170 in December, which didn't happen, but it looks like that could happen now going into the end of January and the beginning of February. So I believe that over the next couple of weeks, we have a really good situation for this to continue to run. And at this point, I don't have a position, unfortunately. And like I said, the main reason for that is because I didn't become bullish on this until Friday's session. So my hope was that we could get a pullback and I could get in around $140. But unfortunately, all that has happened since Friday is that we have continued to break out and continue to run. Jensen is giving a keynote tonight at CES, which could really help to push this stock up. But even if we get a short-term pullback in the next couple of days, I still think that we are poised for a huge run headed into the beginning of 2025. AMD has been one of my bigger holdings for the past couple of weeks, and even though it's been rough to trade, we have finally confirmed a bottom on the weekly chart. We now have 3 weeks in a row of confirmed buying or bullish accumulation on the BX trender. You can see that when the BX flips from dark red to light red, there is a very big chance that bullish accumulation is occurring and that big money is stepping in to save the overall trend. You can see that it doesn't always work. Back here on December 2nd is when we first became bullish on AMD, and it looked at the time like price was going to bounce off of this trend line and move very quickly back up to 160. Instead, it sold off the very next week. We lost about 7% on that trade, which hurt, and price continued to sell down into the smart money zone. The smart money zone is usually going to be the lowest area that institutions are going to push the price of a stock back down to within an uptrend. So basically, if we look at most recent lows of October 30th, 2023, and we take a Fibonacci from there to the high of March 4th at 207.49, sitting right where the 0.786 and the 0.826, that area is considered our smart money zone. We have a course that goes over it completely for free down in the description so that you can start drawing these areas within the next 30 minutes. You can see too, we had one back here in October of 2023, and since hitting that level, price has rallied massively and now we're selling back off into this smart money zone. The smart money zone is so important because it represents essentially an 80% discount within a bullish range. So if we're in an uptrending market and prices sold off 80% from lows to high, that means that you're trading at an extreme discount. And if you're an institution, that is the only way that you trade. You're not buying at all-time highs. You're not driving stock higher. No, you're selling out to the retail. They're basically the retail. You're selling your positions in those cases to retail, and then you're looking to load back up within a discounted range. So now that we have 2 weeks of confirmed higher lows, and this week we're showing higher lows again, this is a very good sign that price can continue its way back up to 140, 160, and maybe even 170 over the next 3 to 5 months. Now, short term, over the past couple of days, AMD has actually performed very, very well. You can see that we did bottom out here on December 20th, pushed up, and then pulled back down into this 120 support. One of the things that you want to see when we have a potential bottom is for market structure to break. So if we actually look at what was happening before this, prices selling off to make lower lows, bounces weak, making a lower high, selling off into lower low, a weak bounce once again into a lower high, selling off into a lower low. This is bearish structure. That is not good. Price bounces, makes a lower high, which is once again not good, but instead now holds a green BX and makes a higher low. This higher low does have significance, but I will tell you it by no means says that the selling is over. What will suggest that is if we can take out this prior high at 130. What I think will happen from there is that price will break that shorter term structure, most likely come up to fill this gap at 136 to 140. And you can see from that point, there's a big area of selling pressure on the volume profile. The other thing is that normally when we break structure like this, price will fill the gap, hit a resistance, pull back, which is what we want to see, test once again, which we want here, a higher low, and then look to run and fill these other gaps up at 160, maybe in February. This is what I think is going to be the trajectory for the next couple of weeks in the next month or so. It doesn't have to work out just like this, right? Like nothing ever plays out to perfection, but that's the general structure of what we need to see. Now, as far as potential stop losses, I will look to remove my positions if the BX flips and makes a lower low or flips back from bright red to dark red. That will be an indication that we could sell off back down to 120, 110, or $100. So far, though, everything is playing out to perfection. It has just taken a little longer than we expected. NEO had a pretty good day. It was up about 5% at one point, sold off a bit, and now we close the session up about 2%. But I have been bullish on this for the past couple of weeks, knowing that we have finally found a bottom, and I still think that there's about a 65 to 70% chance that we have a huge rally on our hands as we head into Q1 2025. Now, the first reason for this is a break in market structure. You guys know that we only want to trade bullish structure. What we don't want to see, and this one thing alone will probably save you a ton of money in your trading career, is that we don't want to see price selling off into lower lows, showing weak bounces, making a lower high, selling off again into a lower low, making a weak bounce, making a lower high, and then making another lower low. This is a sign of bearish structure. Now, in order for this structure to break, price has to make an equal low or a higher low, which happens here. And then we have to take out a previous high. So the previous high was back here at $6. You can see all of the buying pressure building up on the BX trender on August 12th when it flips from dark red to light red. From there, we get the flip to bright green and the breakout begins. Price pushes through that equal high. This is called a break of structure. Now that structure is broken, in most cases, the stock is not going to just break out to all-time highs. No, in most cases, it's going to push through that resistance and then pull back to make a very important higher low, confirm the bottom, and then move its way back up and run. And some of you might be thinking like, dude, how does just reading charts and technical analysis, like that doesn't make sense. The stock doesn't care about your charts. And you're right. But what the stock does care about is institutional money. You see, a stock, whether it's good, bad, ugly from a fundamental standpoint, a stock will only move when participants who have the amount of capital enter into the market and actually bid the stock higher. And those people who do this for a living, they are not going to buy when a stock has rallied 100% in a month. The only people who start buying up here, and I'm sorry if you're somebody who did, is usually people who are newer to trading and investing, and normally people who are trying to chase the market. And the reason that you sometimes might feel like you're always one step behind is because that's what Wall Street wants you to feel. They are not going to buy up at a higher high. Instead, they are going to buy only at extreme discounts. So after the stock drops 45% in 2 months, how much more lucrative or how much more enticing does this potential investment look? Of course, it looks a lot better because what was trading at nearly a double the price premium a couple of months before is now 80% off. And so the reason that this technical analysis works isn't because the stock gives a shit about it. It's because we are watching areas of extreme discount, which are going to be areas that institutions are most likely going to step in. And then we're using specific indicators to track their pressure within the market to follow within their footsteps. Final thing that we're going to cover today is Bitcoin as well as MSTR. So we have been very, very bullish on Bitcoin for the past couple of months. And while I'm still bullish, I've removed my aggressive stance. For those of you who have been trading with us for a while, you know that we are looking to only trade within an uptrend, and primarily we are looking to only trade when there's bullish accumulation within the market, meaning that the BX indicator at the bottom of your screen is showing green. This doesn't mean that we are always going to make money, but it does mean that this is going to be the best environment for us to be trading in. When we see an uptrend with a green BX, this is normally where I take an extremely aggressive stance. Now, any other time that we do not have green on the BX, it doesn't necessarily mean that I'm going to short the market or Bitcoin specifically. It simply means that I'm going to remove my aggressive tendency or basically the financial instruments that I'm trading. So if I'm trading stocks, then I will no longer trade directional options. Maybe I'll start to sell cash secured puts. I will also do this when the BX starts to make lower highs. Back in September of 2024, we became bullish because price started making higher lows. This occurs when we get a switch from dark red to light red. Now, I had tried timing Bitcoin a couple of times back in August and July, and I took small losses for that, which is fine. Because all that matters is that when you do hit it, all of your losses get paid for and then some. We ended up confirming this expansion on September 23rd, and then we played this massive breakout of nearly 100% in Q4 of 2024. A couple of weeks ago, the BX flips to make a lower high, which is our first potential indication not to short, but then the strength is starting to weaken. If you really isolate these expansion areas, you'll notice that the absolute best time is to trade only when it's bright green. And in this case, I wouldn't look to short Bitcoin, and that's not what I've been saying, but I have removed my aggressive stance. This would be a good time if you are somebody who trades crypto miners like CleanSpark, Mara, etc., to sell cash secured puts because price is most likely going to continue to consolidate between 100,000 and 90,000 before another potential expansion back up to $122,000. If you look at this longer term sideways compression that happened in 2024, I don't think we're going to have one of those. I think we're going to have one of these where for a couple of weeks we compress and then just break out again. And the main reason for that is zooming out to the monthly chart. If we zoom out to the monthly, you will see that during that compression, the monthly was making lower highs. As long as it's making higher highs, all of these weekly pullbacks is just a dip buy opportunity. Now, with that said, let's look at MSTR because this is the one that the bulk of my community is trading and the one that a lot of people are asking me about. We talked earlier when we were going over AMD about the smart money zone. The smart money zone is going to be the lowest area within a bullish structure in which Wall Street will pull a stock back to. So if we look at most recent low at $222 up to most recent high of $536, you will notice that the 0.618 is right here at $340 to $300. This wider area is normally going to be where institutions are going to come in and buy. The main area that I specifically look for is actually lower, the 0.786 to the 0.826. We have a free course showing you guys how to draw these smart money zones within 30 minutes. It's completely free. The link will be in the description to our course library. If we look at the daily chart, it tapped the smart money zone. The fact that we bounced is a very good sign because this is normally going to be the lowest that price comes back into. You'll see on Friday's session that price made higher lows on the BX. This is now a further piece of information that shows us a potential bounce is in play. Now, the one thing that I do not like here is that price is still making lower highs shorter term, right? We are making higher lows on this trend, but if we actually look at shorter term price action, you can see that we're making lower highs as well as lower lows. So we need to see MSTR break over 400 and 426. If we can push through this, that could actually flip our weekly BX, which is what's happening right now. And so for me personally, in order for me to become bullish again, I need the weekly to close as it is at this point with higher lows. So I am going to remain bullish, but I'm going to focus to probably sell cash secured puts when it comes to crypto miners and wait for the weekly to confirm. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description.